Welcome to the UK Investor Magazine podcast, the latest on shares, markets and investments, now available on your Amazon Alexa.
Hello and welcome to the UK Investor Magazine podcast, now also available on the UK Investor Magazine mobile app. For today's podcast, we're going to be taking a deep dive into Majestic Corporation, Aquis listed urban miner. We're going to be looking at recent half-year results, how they set up the company for growth going forward, and we're going to be drilling down into some of their plans for the rest of this year and next. And to do that, we're very kindly joined once more by Krystal Lai, who is the head of communications at Majestic Corporation. Krystal, thank you very much for being on the podcast today.
Thanks for having me, Jonathan.
So we spoke a couple of months ago, Krystal, and we looked at Majestic's business model. We looked at what you're doing on the ground, and we looked at what you're doing to help the circular economy, particularly in e-waste. Since then, we've had the half-year results, which are particularly interesting. We've also had an announcement around the OTC market and your plans there, so we're going to be touching on that as well. But I think a good place to start, Krystal, would be for those people that maybe aren't aware of the company, a brief introduction into Majestic Corporation and yourself, please.
Yeah, sure. So I'm head of communications at Majestic Corporation. We were founded in 2018 and listed on London's Aquis Stock Exchange in 2022. And so for those who may not be familiar with Majestic, we essentially provide a sustainable alternative to traditional mining of government-labelled critical materials that are needed in consumer and industrial products around the world. I'm talking phones, data centres, solar panels, EVs, the lot. So we manage the entire life cycle of those critical materials through working with everyone from peddlers to manufacturers and dismantling yards to collect this waste, and then from there process that material through our global network and then sell it back into the supply chain to refineries and manufacturers who then use it to make the components found in products billions of people rely on every day. So that's the long and the short of it to anyone who may not be familiar with us.
Thank you. Very comprehensive introduction there, and really interesting to hear the real world applications of what Majestic is doing. So thank you very much for that, Krystal. So as I said, first place to start, of course, will be the half-year results that were recently announced. Let's start with the numbers, if we may. Krystal, if you could run through the key drivers of revenue, what happened there on the top line, as well as, I know, some really interesting increases in margins as well. So if you could just run through the numbers to start with, that would be fantastic, Krystal.
Yeah, so we're really excited about the progress we've made the first half of 2025. It was shaped by an intentional shift in strategy this period. Revenue stood at 18 million with a profit of 600,000, and we also recorded a 22% increase in gross profit margin. So just for some context reminder, 2024, our revenue increased 67% compared to the year before, and that was no accident. We were all about aggressively expanding our revenue and market share, all while, of course, ensuring we maintained profitability. We acquired Telecycle, which is a UK-based profitable tolling partner, previously operating independently, and that allowed us to secure long-term feedstock as well as vertically integrate our sourcing network in the UK. We invested and continue to invest heavily into building technologies that help with maximising the value extracted from materials. More recently, we've acquired a new site in Wrexham, Wales, and this upcoming facility is expected to come online mid-2026, which will triple our local processing capacity. And we've also expanded into 2 new streams, solar panel waste and battery materials. So 2025, the focus was all about margin expansion and operational efficiency, and that's reflected in the numbers. Revenue did come in lower to 18 million. Gross profit margins improved 22%, like I mentioned, and that was driven by specifically targeting and expanding more profitable material segments, such as our precious metal segment and base metal segment. So the long and the short of it is that this pattern aligns with our long-term strategy, which is designed with a much broader view in mind.
Fantastic. Thank you very much, Krystal. We're going to be drilling down into some of those key actions that Majestic are putting in place a little bit later on in the podcast. But I do want to look at the period that has been for the first half of 2025, because of course it was a period of high volatility in financial markets and of course the markets that you operate in, and that was mainly due to Donald Trump's tariffs. Of course, that caused severe disruption in many markets around the world during the period. Are you seeing, from your perspective, Krystal, any signs of stabilisation, or has there been a period of stabilisation for a while now?
Yeah, so it's no secret that the industry and many others have faced significant headwinds this year. Earlier this year, we were battling with export regulations across the UK and Europe, which disrupted material flows significantly. So, for example, there were months where suppliers were unable to obtain necessary export permits, and for some context, some didn't secure them until late April and June, which I'm sure you can imagine severely disrupted volumes. This was then followed by a surge in geopolitical trade tensions, which obviously compounded the challenges. Now, that said, we're now beginning to see early signs of stabilisation on both fronts. Most suppliers have obtained their export permits and shipments have resumed. We expect the positive impact of these renewed flows to be reflected in our results later this year and into early next year. But the reality, though, is that we've been developing a model. Majestic's been developing a model to help us navigate an increasingly nationalistic landscape and the protectionist policies that come with that. After all, these recent restrictions and policies are really just a reflection of that trend.
Indeed, of course. Very good analysis there. Thank you, Krystal, of what's been happening out there and how that actually looks to be transitory out there in the market, and how well Majestic is set up for the rest of the year. And that takes me on to my next point quite nicely, because reading through the half year report, and you've reiterated, as you've mentioned on this podcast, a target of reaching 100,000 tonnes processed by 2030. I understand that that figure at the moment is around 30,000. So it's a huge growth you're projecting there over the period. What are the key actions? What are the key strategy points that you're putting in place to achieve that goal?
So, all of our actions, all of our tactics have been executed with that 100,000 tonne annual processing target by 2030 strategy goal in mind. So the acquisition of Telecycle, expanding our UK presence and securing steady feedstock volumes. The Wrexham facility, which I mentioned earlier, that's slated for mid-2026, and that will dramatically scale our local processing and enable site-level material separation and treatment. We've landed offtake agreements with customers, increasing throughput and material pool across Europe and Asia. We have a digital sourcing app, which is currently under validation with Apple and Google, which will allow us to efficiently tap smaller collectors, which further diversifies and increases our material supply. And we've been deploying and iterating on proprietary processing solutions and technology that we've developed in-house to extract effectively more value from the same volume of material, which improves yields and reduces waste.
That's actually a really interesting point that you make there, Krystal. One of the highlights of that period was an increase in margin, but it looks like Majestic aren't happy with that and looking to develop on that going forward, and using the technology there to, I would have thought, increase that margin more going forward is particularly interesting. You've detailed in this podcast and the conversation that we've had before, Majestic's a truly global operation, as you say, operating in Europe and Asia through your network. But it seems like a lot of the focus going forward is going to be on the UK. Of course, you've earmarked Wrexham as the site for 50,000 square foot facility set to go online in 2026. What's so attractive about the UK? Of course, you're operating across the world, but the strategy looks very much focused on the UK. What's so attractive about this market here?
So the UK is an attractive market for us for quite a few reasons. You've got strong regulatory tailwinds, so the right to repair laws, the UK ESG reporting standards that favour responsible recyclers. You've got established infrastructure with many legacy recyclers, but few with the same Majestic level of yield optimization and end-to-end traceability. You've got growing demand from AI data centre build-outs, that require sustainable, most importantly, local supply of copper, precious metals. You've got labour, logistics reliability. You have favourable sentiment toward circular economy investment. So we've actually had really interesting conversations with banks, government partners, and we're seeing very promising support. And it's all in line with our original belief, which is that there is just a lot of support and, the infrastructure to ensure domestic recovery capabilities continue to be built in the region. So simply put, the UK combines policy support, local sourcing depth, investor appetite, which makes it a prime launchpad and sandbox, if you will, to test, to scale all of our ambitions.
Thank you, Krystal. So you mentioned there AI, which is particularly exciting because the way that I see it, the strategy that you have in place will make Majestic a key element in the supply chain of AI infrastructure. For you and where you're sitting, how exciting is this opportunity and what does it actually mean for Majestic going forward as a business?
Well, the growth of AI and hyperscale computing is very significant for us, not just, because of marketing and not because of, in terms of just a narrative, but in a very tangible materials demand perspective. The hardware fueling AI, from GPUs to high voltage power infrastructure, is rich in precisely the sort of materials, metals that we recover: copper, aluminium, PGMs. So to give you an idea of the scale, analysts project that data centers could consume 300,000 to 400,000 tons of copper per year globally by 2030, and much of that is driven by AI infrastructure. And that's just one material type, right? The natural question to follow is, how often are there refresh cycles of this hardware? And it's every 4 to 6 years on average. So what that means is it creates a steady, recurring stream of high-grade material demand, as well as demand for circular net zero sourcing. So for Majestic, this translates into two major opportunities for us. Procurement. These refresh cycles produce a flow of premium grade e-waste, which we're very well positioned to access due to our global localized presence and network, as well as a supply chain fit. Manufacturers and data center operators are under pressure to show traceability and sustainability in their hardware supply chains. So our net zero multi-metal recovery model offers exactly that.
So that's a fascinating point that you make there, Krystal. 4 to 6 year replacement cycle really does support demand for your offtake going forward in AI. And it's interesting to see what's happening out there in the market at the moment in terms of some of these AI infrastructure plays, particularly in the US, and what's happening with their shares. Majestic, of course, are a key part in that supply chain. So that's certainly something that I'm going to be particularly interested to see, how that develops for your company in the coming periods. So, Krystal, we've had a really detailed conversation about what's happening at Majestic, and I'm sure something that investors are going to be particularly interested in is your view of what's going to be happening for the rest of 2025. So, for investors that are looking at the Majestic story, what would you say to them to keep an eye out for from Majestic for the rest of 2025?
We're in October and we still have a heap coming up. We've got the Wrexham site build out, like I mentioned earlier, that's coming online in mid-2026. We have the digital procurement tech rollout contingent on Apple and Google approvals. We have strategic partnerships and offtake agreements where we continue to deepen our partnerships around the world, which help de-risk and ensure consistent demand for recovered materials. And like I mentioned earlier, now that we've come out of a period of aggressive expansion, we're laser focused on driving margin expansion. And when market conditions allow, we're then well positioned to expand aggressively again. So those are a few. You mentioned and touched on this earlier, but one of the most significant developments is that we're in the advanced stages of applying to cross-trade our shares on the OTC market in the US. And this will provide greater accessibility for North American and APAC investors. And we see it as an important step in deepening our ties with two key markets where we already have strong commercial relationships. So a heap coming up.
Indeed, Krystal, exciting times, and certainly looking forward to having you back on the podcast before long to discuss some of these developments. So, Krystal, thank you very much for being on the podcast today.
Thank you so much, Jonathan.
And thank you very much to everyone for listening. Thank you.
We hope you enjoyed listening to the UK Investor Magazine podcast. Please do share the podcast, and we really value any reviews and comments you leave us in your chosen podcast player. The views presented by the hosts and guests of the UK Investor Magazine podcast are in no way investment advice, and please remember all investment involves risk.